Ladies and gentlemen, good afternoon and welcome to Boston Global Wealth, and to the spectacular 25 Hours Hotel here in Paddington, Sydney. For those of you I haven't met and haven't had the pleasure of meeting so far, my name is Corey Cooney and I'm the Group Managing Director here at Boston Global. At Boston Global, we take pride in doing things differently. We're a family office, an investment and funds management group, global technology advocates, real estate specialists, and champions of all ideas with the power to change the world. Our business is built on joint ventures and strategic partnerships. We have partners and affiliates and employees across Australasia, China, the United States, the UAE, and the United Kingdom. This ecosystem and global network provides access to exceptional opportunities through private family relationships and institutional partnerships. Boston Global Wealth is our latest joint venture, and one we are very, incredibly proud to shape. I'd like to thank and acknowledge our founding advisors here this afternoon. Mr. Sonny Kang. Where are you, Sonny?
Yeah. Hi.
Mr. Scott Taylor. Mr. Rocco Panzerino. Mr. Liam Walker. Mr. Logan Wong. And Mrs. Madeline Cruz. I'd also like to recognise the members of Boston Global that are here today. Mr. Bill Mossao, Mrs. Natalie Cooney, Mr. Lee Higgins, Mrs. Ladamos, Mr. Dennis Cooney, Mr. Jeff Melville, Mr. Jack Colreevy, Mr. David Columbro, Miss Mariana Ioanu, and Mr. Peter Kotsis. Ladies and gentlemen, we stand at a pivotal moment in history. Technology, demographics, and geopolitics are reshaping both the built and digital worlds at a pace unseen since the Industrial Revolution. This evening, Natalie Cooney, the Managing Director of Boston Global and Chair of the FSHD Global Research Foundation, will moderate our panel, featuring Mr. Bill Mossao, Chairman of the Boston Global Group, Mr. Damien Bruckard, Founder of Geopolitical Strategy, and Mr. S.J. Jha, Chairman of Morrison Securities and CIO of Beaconsfield Capital, who will together explore how geopolitics influences the global economy, and critically how it shapes opportunities for wealth creation. At Boston Global, we believe wealth creation is increasingly driven by geopolitics. So we invested our time, energy, and capital into a specialist firm, Geopolitical Strategy, which was founded by Damien Bruckard, one of our panelists this afternoon. Our logic is very straightforward. Geopolitics is the sharpest lens for understanding global confidence. Global confidence then sets the scene for policy, migration trends, wars, tariffs, and regulation, shaping outcomes at both a national level and an individual level. 3 years ago, Boston Global made a deliberate pivot because we saw geopolitics shift from background noise to primary signal shaping global markets. Policy, trade, conflict, and migration are now driven by global geopolitical forces, not the other way around. Boston Global invested deeply in understanding these dynamics because global confidence drives policy. Policy drives markets, and markets drive wealth outcomes. When confidence moves, capital follows. This capital flows across mergers, commodities, defense, technology, and real assets. This is why geopolitics sits at the core of Boston Global's investment strategy. It shapes how policy is written, where confidence is built, and how wealth is protected or created. And this is not theory. This is exactly how Boston Global manages its own wealth as a family office. The same lens, the same discipline, and the same access that guide our balance sheet underpin what we are building with Boston Global Wealth. Our key thematics: real estate, energy transition, AI and robotics, health and wellness, space and defence, and ESG all flow from that global view. For Boston Global, ESG is not a box to tick. It's about real outcomes, and it's central to our philosophy. Our interpretation of ESG is grounded in social outcomes, the well-being of people and the environment. This does not mean avoiding traditional sectors. Rather, it means approaching every decision with a social conscience and long-term responsibility. Boston Global's investment strategy does not start with asset classes. It starts with global forces. Geopolitics does not predict markets, but it defines the conditions in which wealth is built. Take real estate. Once seen as a traditional and slow asset class, is now being reshaped by AI, robotics, and migration. Buildings are becoming intelligent assets, self-optimizing and efficient. AI anticipates tenant behavior and energy demand before they occur. Robotics is transforming logistics and delivery, creating an entirely new asset class. Migration adds another dimension. Population growth and new work patterns are fueling demand for housing, infrastructure, and flexible commercial space. For real estate, migration isn't a challenge, it's a catalyst for growth. Australia sits at the centre of these shifts. We may not be an AI superpower, but we are a sophisticated adopter with a world-class research and regulation. Our opportunity lies in harnessing innovation and global collaboration to drive new value creation. The next decade will reward those who embrace convergence, who see technology as a tool, not a threat, and who invest with purpose amid change. The future belongs to those who build for the world that is emerging, not the one that has passed. I recently attended the launch of AGIBot, AI Technology Centre in Malaysia. It reinforced to me that robotics will be embedded in our daily lives by 2030, just as mobile phones are today. The world is changing, and so too is the way people invest and what they choose to invest in. We're on the cusp of the next industrial revolution. At Boston Global Wealth, the investment committee, on which I proudly serve, we have reviewed 73 new opportunities in the past 90 days alone. Many align with these themes. This only represents a fraction of the opportunities that have actually been presented to Boston Global Group. We work side by side with your advisors on a daily basis. This isn't about product. It's about access. Access to private market opportunities, strategic partnerships, and family office investments that rarely reach the public domain. That access, combined with institutional rigor, is what differentiates Boston Global Wealth. The investment committee, which meets weekly, supported by our team of analysts, don't just screen opportunities. We deconstruct these investments. The expertise that are within the committee and that the committee has across multiple sectors allows us to identify risks that may ordinarily not be considered. On that note, could I please get the Boston Global Wealth advisors to come up here for a moment? Please give them a round of applause. Thank you, ladies and gentlemen. So, ladies and gentlemen, please enjoy this afternoon. I'll now hand the phone to Mrs. Natalie Cooney to welcome the panel and moderate the discussion.
Thank you. Good evening, ladies and gentlemen. Good evening, ladies and gentlemen. There you go. Hello. Could I please ask our delightful panel to join me at the front? And while they make their way, allow me to introduce who we have. Joining us, we have SJ. SJ is the Chief Investment Officer of Beaconsfield Capital Management, a global technology-focused investment firm with early investments across AI, robotics, defense, software, and biotechnology. He is the Executive Chairman of Morrison Securities, Australia's largest retail option brokerage. He is a board member of the India-Japan Foundation and a recipient of the Anjung Yang Award for Social Service from the Republic of South Korea. Absolute pleasure. Now, I know SJ, and that is a small percentage of his actual life qualifications and who he is in this world. We're very blessed to have him, so thank you. Seated next to SJ is Damien. Damien is the founder and chair of the Geopolitical Strategy, a firm that advises corporations, financial institutions, and public sector clients on geopolitical risk and opportunities, strategy, development, and corporate diplomacy. Damien previously held senior roles at the International Chamber of Commerce, leading global engagement and trade and investment policy and advising the Secretary-General. Earlier, he served as an Australian diplomat with the Department of Foreign Affairs and Trade, including in the Australian Embassy of Moscow, and as the trade negotiator, foreign policy advisor, and public international lawyer in Canberra. Damien also writes a column for Geopolitical Dispatch, the firm's client brief of major topics in international affairs interpreted for business leaders and investors. Welcome, Damien. So pleased you are on our geopolitical panel. And last but not least, my beautiful father, Mr. Bill Moss AO, who's the executive chairman and founder of the Boston Global Group of Companies. He has built a successful career creating and delivering innovative businesses all around the world across areas of finance, real estate, funds management, energy, tourism, medical research, philanthropy, and of course, business investments with our family office. So could we please bring a warm round of applause to our panelists this evening. Thank you. Now, we just heard from Corey around the creation of wealth and that link in geopolitics. I'd really like our panel to talk us through this evening why it is that for many years this topic of geopolitics has sat in the background of decision making, and all of a sudden it's taking the front seat in today's world, in today's global markets. So I'd like us to touch on our views of this regime shift, if you will. So perhaps, Damien, we can start with you. From a geopolitical strategy perspective, what has changed in the last decade that makes this moment fundamentally different? Why are geopolitics relevant to us here? Or is it just a lot of noise?
Does everyone know what I'm going to say? Or who I'm going to say? Here we go. Can you hear me? Yeah, there we go. So, if you read any history book, there's always two forces at play that describe, what moves history. Structural forces and individuals. There are some economic historians who put more emphasis on the former, and those that, conform to like the great man theory of history that put more emphasis on the latter. Both clearly matter. Over the last decade, some of these structural issues have become very clear. The biggest development really has been the rise of China, of course, and the challenge to American supremacy globally. And that's had huge follow-on consequences in terms of industrial policy, tariffs, competition between the great powers, alliances, that sort of thing. I think we all know that. Then the other thing is personality. Donald Trump. So the way that I think about Donald Trump at the moment, Mark Carney got up at Davos recently and he said, the rules of the game have changed, might makes right, things have fundamentally changed. And often when people analyze international relations, they think about it as a game of chess. You hear this analogy all the time, like leaders are playing, strategically, rationally, looking towards the future. But international relations isn't like chess. International relations is much more like a sport that was made up by a German concept artist called chess boxing. And in chess boxing, what you do is you have a round of chess, speed chess, and then you get in the ring and you have a round of boxing. And then you do it over and over again, and you win either through knockout or checkmate. Now, what's happened is over the last 80 years, after the Second World War, the great peace, great moderation, we've basically had leaders who are chess players first. And the game of chess boxing has been interpreted as a game of chess. You know, the rational, strategic, technocratic, bespectacled nerds playing. Enter Donald Trump. He's a fighter first. He's not a chess player first. He probably has a strategy. Query whether it's a good one. We can debate that. But he's got a different strategy for playing chess boxing, which is to focus on the boxing. And when you box well with your opponents, when you get back to the chessboard, everyone's discombobulated and dizzy, and it's hard to focus and it's hard to strategize. And especially if it's like one of those, those parks in New York where you have like 10 chessboards in a row. And see one person playing all those pickle, sort of bilaterally. It's like that. So what kind of boxer is Donald Trump? Does he remind you of a certain boxer? I would say he's like Muhammad Ali. He's a good boxer. He's fast, he's strong, he's energetic, but he can trash talk. And he knows that winning a boxing game or a chess boxing game, half of the battle is before you get on the board or, in the ring. And so everyone's confused. So we've got these structural forces at play. They haven't changed. They'll continue to be the same. But suddenly there's a world in which someone is playing the same sport in a very, very different way. And we're all trying to work out what the hell is going on. And it's got massive consequences because people still don't know how to play against this Muhammad Ali in chess boxing.
Could I just pick up on that quickly? Sorry, Estries.
No, go ahead.
I was just going to pick up on that because it's interesting when you talk about structure plus personality, then you got a different game. I was just going to throw it to Bill for a minute. Bill, with regards to today's geopolitical structure and personality, what are you seeing with the investment cycles? Through your career, you've seen a lot of different financial styles of cycles. What are you seeing today?
Well, I think where we are today is really, really interesting. Like, investing has been too easy for a long time. It's slowly become very complex. It's become complex in a way that people don't really understand the bigger picture behind it. And I'm a great believer in history. I love history. I've studied the collapse of all societies and why they rose, and why they fell. It's the same story all the time. And I'm a great believer in cycles, economic cycles. And having grown up with Ray Dalio and all his cycles, you start to learn about cycles and you believe in them, and then watching that through various other individuals with ageing population cycles, cycling related to technology, etc., you come up with a view that the world actually keeps repeating. And I'll go back to Russia. You mentioned Russia. The K report, I can never pronounce Russian now, but Nikola Kondrov, something like that. Early on in hundreds created what's called the K cycle. And very famous because he went back, he looked at all the economic assets, productivity, wages, employment, in the capitalist world, not much, in the capitalist world. And he said, he came up with 60-year cycles. 60-year cycles, and yet 4 seasons in a cycle. Every 15 years you get different ones. And even back then, he has AI in it, or what we call AI, but he had technology in there. It's 1 cycles. And technology was in the middle cycle before you had overinvestment in technology, and then you had to collapse the system around. And this was very interesting. Now, he was a very intellectual guy. He was a politician and economist. He actually got executed by Stalin for teaching about what the communists didn't believe in. They didn't believe in the K cycle. But then another guy from the UK, David Murren, came along a little bit later. And David's very famous. David, very famous guy. I'd love to meet David one day. And he actually did the Murren cycle. He took the case cycle. He added war to it. He went back and and I worked out this all related to Fibonacci cycles as well. So it's quite interesting. But you go into the Murren cycle, and he also has got the 4 seasons, and he talks about AI. Then you go one step further, he talks about war, and why we get conflicts, why we get this, what you call the Russian boxing, the chess boxing, right? He talks about that, and he leads into when that happens in the cycle, and it all happens essentially after you've had a boom in technology. It's right where we are right now. And that leads then to the next step. He says, a fight for resources, a fight for the raw materials, a fight for oil, a fight for energy. And that's what starts the global conflicts. This new decision to take things by power that you can't control. And that was David Moore. He's a very successful guy. He went on to set up JP Morgan's hedge strategies and their derivative trade, I think, in Europe. Very, very successful guy. Author. Actually practiced. He had a big hedge fund himself. He still has, I think. And all of that cycles. And that what fascinated me. And today, I'm looking back at where we are today. I'm saying, this is all in history. We've been through this before. But you can't decipher where we are today. You've got to take a step back and have a look where we are over a bigger period to understand where we're going. And that dictates where you want to have your money, I believe. But that's where I see where we are today. I'm sure SK will have a different view.
Can you? Oh, very good. No, actually, I agree with everything Bill just said. And I think if you wanted to focus on one particular thing in one particular cycle, that tends to drive a lot of things, it is what the hegemonic or dominant currency is doing. I think if you look back at the past 40 or 50 years, an enormous amount of U.S. foreign policy is driven by the dollar. François Mitterrand, the famous Prime Minister of France, once called the U.S. dollar an exorbitant privilege, because what it means is that the United States has an enormous amount of control over the economies of almost all countries that transact in the dollar. And the U.S.'s political involvement with in the Middle East was very much about constructing what has been idiomatically called the petrodollar, right? Which is that most oil trades settle in dollars. And so your primary access to energy comes through the U.S. dollar. I think if you're looking at this from a cycle or empire theory of cycles, and besides the excellent names Bill mentioned, I think one great thinker that often gets underrated is a guy named Peter Turchin, who was a great inspiration for Ray Dalio at Bridgewater. To give you an idea of how insightful this guy was, he published an article in Nature in 2010 predicting that we'd have a huge pandemic in 2020. He's incredibly brilliant. He's got a great book called The Ages of Discord. But if you're thinking about late stage empires, and the United States is nothing if it's not an empire, one thing is they tend to get very overextended in terms of their finances. In the US's case, this was very clear. Obama wins the Nobel Peace Prize in 2009, and 2 years later, he's conducting 5 simultaneous illegal wars, right? Those illegal wars have cost a huge amount of money. And that was kind of the beginning of the deterioration of the American balance sheet, and therefore the balance sheet against which everyone else transacts. That's what has also resulted in increasing wealth inequality to a degree, because if the U.S. dollar and therefore the U.S. interest rate becomes kind of the dominant lever in the entire macroeconomy, the result is that when interest rates come down and people take riskier and riskier bets, more and more assets will accrue to those who hold financial assets. But that's not more than 2% of the world population. Even in a very wealthy country like the United States, it's only about 20% of the population, which is also, again, one of these things that underlies why you have populists like Trump coming up. The U.S. Treasury Secretary Scott Bessent has been very good on this subject. He said, and you can believe it or not, but it's a sensible approach politically. He said this administration is not for Wall Street, it's for Main Street. And what they mean by that is we need to reverse this flow to increasingly financialized assets. And that's also underlying this decoupling and the onshoring of manufacturing businesses again. So all of these are kind of the broad trends that I think will lead into the rest of what we discuss.
So with these trends, following on what you just said, in your opinion, what are the strategies in your business that you're bringing forward to follow the winners for the next cycle?
Yeah, so I think I'm going to defer to something Bill said again. Making money has become much more complicated. I think you need to understand a lot of very complex technological transitions much better than you did previously. I mean, to give you an idea, one of my best friends, this is a company that we invested in. It's one of the fastest growing software companies in the US. It's a testing platform for AI. He wrote a post in November 2025 saying, all this hubbub around using AI for coding is really, really overrated. You still can't create great systems of record, great software that you can run large companies on using these AI tools. He just made another post about a week ago saying the exact opposite. He said, Claude Code, and this comes from the company Anthropic, which is a competitor to OpenAI, which I think everyone will have heard of, has reached a point of coherence where now 80% of the code I don't write by hand anymore. And this is one of the most technologically sophisticated teams on the planet. This guy used to be in charge of Google's distributed computing group. So the pace at which technology is changing is incredible. And that also means the places where technology is changing very quickly, it becomes very hard to underwrite investments. So I think we're seeing an enormous turn in the venture capital community back to businesses that they haven't been interested in for the past 30 years. Largely driven by low interest rates, the way to make money from about 2010 onwards was get into long duration equities. The interest rate's low, you can't make any interest lending, so you're mostly buying software companies, right? So they have very reliable recurring revenues that grow quite a lot. And almost anyone who really started in that in, say, 2010 and 2011, you could easily be a billionaire and you wouldn't have had to try very hard. You just have to keep holding. I don't think you can do that anymore. And the result is that the venture capitalists are now increasingly looking at a lot of these hard tech businesses, exactly the business areas that I think Boston Global has their primary interest in: robotics, in defense, in biotech, businesses that have much longer lead times, but where the result can be disproportionately larger, but where you also need somewhat more valuation sensitivity. I think the days of writing checks at very, very high valuations, which is how the venture capital industry broadly has functioned for about 3 decades, are probably coming to an end. I think you need to be valuation sensitive. I think you need to be very technology sensitive. And I say that despite the fact we're just writing another check into a business at $100 billion valuation with no revenue.
I might just throw a question to you, Damien. We're talking about complexities of wealth. If you were fortunate, maybe you bought some Bitcoin a decade ago, and you can all of a sudden become a very wealthy person without the acumen of choosing an investment and carrying it. There's a lot of large wealth out there, perhaps by accident, and there is an incredible amount of wealth out there from discipline, from good luck, whatever you want to call it. There's technology, robotics. We are living in a very complicated world, fundamentally complicated, whether it's resources, whether it's AI, innovation. But my question to you, Damien, is what's happening with politics in the world? War, tariffs. How does a decision overnight affect an investment that looked promising because you're riding robotics or AI? It's such a quick, fast-moving space. What is the uncertainty, and how does that feed into this loop of wealth creation from a geopolitical perspective?
Yeah, well, I think Corey sort of set out the framework really well. It fundamentally affects confidence, uncertainty. there are direct ways in which geopolitics can manifest as regulations, whether that's in the form of, tariffs or sanctions, currency fluctuations. There's a million different ways in which that occurs. But I think, the fundamental thing that seems to be going on to me is that geopolitics is just adding this enormous amount of volatility at the moment into markets. It's becoming really unpredictable. What did Yogi Berra said? He said it's prediction is hard, especially about the future. It's always been hard to predict the future, but it is really complex right now, and it does link to technology as well. These are probably the two big forces in the world, and they do intersect. And so, just as there's a lot of technological development, there really is an industrial revolution that is occurring at the same time as a result of these, developments in artificial intelligence. And it's happening super quickly. You think about some prior technological developments, whether that's electricity. It took 30, 40 years for the light bulb to be diffused around the world, to be adopted. The technological adoption of ChatGPT had 1 billion users in less than a year. So the pace of not necessarily development, but deployment and diffusion across the economies is changing massively. And, if you look at China's economic strategy, their AI strategy, it's all about diffusion. They've got a 5-year plan. They always have a 5-year plan. Their 5-year plan is to have 95% of their economy infused with AI. That's a very different approach to the American approach, typically, which is about focusing on, developing the next frontier of models. And all of this has geopolitical consequences too, because fundamentally what drives power, the central unit currency of geopolitics, and who has more leverage over who has the cards, as Mr. Truck would say, comes down to economics. And which countries will become the most powerful politically in the world will be those that, in large part, adopt artificial intelligence across their economies. So there's this real sort of geopolitics as driver and geopolitics as consequence as well.
Thank you. SJ, you live in a world of biotech, robotics, AI. What are you seeing in the world as something quite attractive for wealth development globally?
So I think, if this is not financial advice, I'm not licensed as a financial advisor in Australia. I'm really required to say that. I already spent too much time with ASIC on this particular day.
And I never bought Bitcoin.
Yeah. Okay. So, with that caveat aside, I think if you're looking at probably the most, relatively safe and comprehensible ways, and the funny thing is I've actually gotten a great education in a lot of this, from a lot of the Aussie brokers, we work with, is probably, critical minerals. I think that is probably one of the absolute safest things you could have in your portfolio, because almost regardless of where it goes, a reasonable balance of critical minerals and maybe some fossil fuels. That is the substrate for everything that's going to happen, because it's very clear that the energy demands are growing exponentially far beyond what CapEx can cover. I think by 2030, probably the copper shortfall is going to be maybe 50, 100 million tons. I mean, it's absolutely incredible numbers. I think other than that, it's very, very hard to make good investments in a lot of these things just yet, because things are evolving really, really quickly. I think that the other thing is that in venture capital backed businesses, there's definitely a winner effect. Companies that are able to attract a lot of capital early on can use that capital to build moats around their business that are hard to pierce. And I think that's more true now than it was 10 years ago, because the kinds of businesses we're building in robotics and biotech and so on, they require a lot more upfront investment before they start making revenue in many cases. So I think it's become very, very difficult on the private side. And it is certainly a stylized fact about the venture capital industry that it is underperformed. Almost all a lot of my venture capital friends are right now reckoning with the fact they can't raise a new fund because everyone is now very familiar with the statistics that the venture capital industry as a whole has underperformed the S&P 500 over the past 2 decades. And so on the private side, I think things have gotten really, really difficult. And then the difficulty on the public side, which I don't think will persist, which is the good news, is that a lot of the most interesting companies you can buy to play on these themes, for example, if you're interested at the intersection of space and robotics, you probably want to buy SpaceX. They'll be coming to IPO quite soon. So I think the dynamics of the public market are also changing a lot around that. The public markets have been frankly quite boring for a while, but boring in a good way if you were investing in technology businesses. I think that's changing a lot. I think now there's lots of interesting opportunities in older businesses that are technologizing. And I think there's lots of opportunities in businesses that benefit in other downstream ways. I think Corey brought up the great example of real estate, and robotics in real estate is probably something no one is looking at, but this country is probably unusually well situated to look into. I think it's always good to focus on your circle of competence. Australia, I think, when I talk to the other venture capitalists here who are looking at seeding new businesses that are coming up, I think one of the biggest things I say is, you guys are really good at real estate. You guys are really good at mining. These are industries that are actually terrible examples of technological failure, in the sense that buildings today look a lot like buildings did 40 years ago. So our built environment hasn't changed very much. And therefore, there's a massive opportunity in the next 2 decades for that transformation to occur. And an enormous amount of wealth will be made in that.
Esther, you mentioned some signals in regards to this wealth creation. Damien, could you give me some signals for the geopolitical landscape? I mean, all you have to look at is the noise of social media. Everything is so present at the moment. Conversations are leaked, photos are staged. It's like a good soap opera when you look at the global political world. But what are the signals? How do you stop that noise and look at the real data to help us?
First of all, I would suggest don't look at social media. It's very bad for your mental health. Very bad for your mental health.
Saying you can't escape it, right?
You can't escape it. We need to extend the ban on social media to adults. Maybe it's probably the best thing we could do. It's really tough to get a good read. Numerous reasons. Social media encourages things that are addictive. Traditional media chases clicks and sensationalism as they're in the entertainment business, sort of fundamentally. And they've all got a slant. So, and they take things out of context. They, provide context that, suits their own, commercial and political purposes. So, an admission from me, I have barely read the news in 15 years. I read a book once. I'm sure you would be very familiar with Nassim Taleb. He wrote this book, Anti-Fragile, and in it he had a line saying, to cure yourself of newspapers, read yesterday's newspaper every day for a year. And it really stuck with me. And, so when I do my own geopolitical analysis, which I do all the time, I go to primary sources. That's what historians do. They'll do primary sources first and then secondary sources. So I watch a lot of Trump speeches without any mediation. That's what media means. I read transcripts. I wouldn't suggest you all do that. That's as bad for your mental health. It's just you. But I think the key thing is really to, try and distill the essence of what's going on, to look for trends, not just, stories. I mean, I'm very lucky in that we have a team that goes through all of the media across all of the world every single day, both sides of politics, and distills it into one email, which I read and now, clients and subscribers read. I use that, but that's pretty much it, because otherwise you get overwhelmed and you get distracted. And so many, in fact, there's sort of like a moral dimension to this as well. Like so many of our political problems here, we're seeing greater polarization. It's even more extreme, obviously, in the United States. It does come from people being in their own sort of echo chambers and hearing what the algorithms think that they want to hear. So my advice is less is absolutely more.
Thank you. Bill, I might throw it to you. Knowing how you think, in that you don't see problems in the world, you see opportunities. If you pick something up, if you turn it around and you see it from different angles, what are the problems you're seeing in today's market, and what are the opportunities you're excited for your own private wealth and management in Boston?
Could talk for an hour on this, but there's one opportunity and a lot of problems. Get back to social media for a second. What happens today? Social media got to the point where every algorithm out there today monitors social media opinion on everything. All this thrown into the ether, what people are thinking. So even in share trading, you've got bots working off sentiment on social media, and they're dictating where people's opinions are, price going up, down, down. So what is it? That think is in social media is real. Whether you believe it's right or wrong, it's actually real, that people's opinion. Now, that despite the fact that we've got 70% of all the social media responses out there from bots around the world who are there pushing an angle and they're pretty easy to see. But that's an issue. It's an opportunity. I'll give you a good example on that. Today, we talk about Trump, bombing Iran, invading Iran, bringing down the regime. You can go and bet on that. So bet on it. So what we've actually done, it's all happened in America, of course, but we've actually turned war and all this difficulty going on around the world into a sporting game. So we can bet on what's going to happen. You can literally go down to the TAB and put a bet on, and you can bet on the outcome, what will happen, and you get paid accordingly. So it's real. Whether we believe it or not, we like it. And I'm with you. Like my father told me when I was a young kid, the one thing I remember my father saying is, never believe what you read in the newspapers. He'd say, even question the date at the top, but it's good. And you're spot on. Never believe. There's always another story. But unfortunately, it's very difficult to separate real opinion from all opinion. And that's where the problem starts. But back to your question, Natalie, opportunity. Lots of them. I'll give you one good example that I like at the moment, and I find quite interesting. And I go back to migration. I like migration. And if you go back to history, it doesn't matter where you go, but pick a country, pick Australia. Have a look at the top 20 or 30 wealthy people here and find out where they were born. The vast majority were born overseas. So we import successful people. And it takes time, but those people come in, they build empires, they invest, and they're successful in the country. So countries need immigration. They need the right sort of immigration that has to fit with the society. But we need it. Now, right now, what we see, I'll give you a good example, out of China, is all to do with, I love that expression, the chess boxing going on. And what we're seeing now, China's been struggling because of tariffs and because their economy moved on and they've got higher cost of production. But what's been happening internally, their rate of technology has been expanding at a very, very high rate. Their technology is world class, leading the world in many different areas today. It's going well. So what the Chinese are now doing, they're doing now what the Japanese did back in the 1990s. They're setting their successful companies offshore. They're setting them offshore to actually assemble offshore and to use the offshore entity they're landing in to build global distribution businesses out of another company. We're seeing that today. We're seeing wealthy companies come out from China. They don't need to be in Australia, but they want to be in Australia. They want to use their technology in China, bring it here, create a local product, brand it Australian, and they want to export from Australia to the world. And that's happening. That's a trend happening now. Is that good to Australia? It's very good to Australia. It's very good because we get all the benefits of businesses, export businesses, employment, investment. It's a multiplier effect. All these people coming in, they want buildings, they want factories, they want all sorts of people that want to work for them. It's very, very important that we can bring you a source of capital into this country. And that's one trend happening now. But that wouldn't be happening here if it wasn't for what was going on with tariffs. It wouldn't be happening here, but it is. And you're going to get the same situation happening in China that happened in Japan. And to see it, and see Japanese companies actually having more income offshore. And why they all do that? I would get around tariffs, for one reason. Or try to get around US tariffs. But it's also a way of moving money out of China to other jurisdictions. And that's a trend. So that's real, it's happening today. And that's all because of this geopolitical cycle that's going on around the world. But that's just one, Natalie, and there are probably 20 or 30 that I'm seeing that are major trends happen today that are as a result of all this turmoil globally. And there's some big benefits here for Australia. And there's big benefits here if we play it right. Will we play it right? Probably not. But there's some big opportunity here if the government can get its mind around.
Excellent. Well, I do want to have the opportunity to open it up to the audience before we run out of time. If there are any questions, please raise your hand and we'll answer them. And while we wait for that, I guess the final question from us as a panel, please share your comments. If you each had to describe the current global environment in one word from an investor's perspective, what would it be? Where are we feeling?
Oh, it's exciting. It's exciting. It's exciting because we're going into a world where we don't know where we're going. We think we do. But that's where the opportunity is. If it's land, everything's priced as a commodity.
So you're an explorer at heart? Damien, what do you think?
I mean, I think volatility in one word, uncertainty, but that's not all that helpful as words, unless you're a hedge fund, I guess. Should try to. You may be.
The worst thing about going last is everybody takes the easy ones.
Yeah.
Mr.
Perfect. Do it.
Yeah. I'm gonna go with something a little more unusual. I'd say fractal. And what I mean by the word fractal is that what's happening now is that almost everything is getting so complex that you need to look at it very, very deeply. And it tends to unveil its own layers altogether. And I'd say this is it's very closely related to the fact of this major geopolitical decoupling that's happening. If the U.S. can't afford to enforce its empire, and it can't with $37 trillion of debt, then the reality is every country has to look out for itself a lot more. And therefore, something that people were never looking at, which is, where is a company located? What does that mean for its prospects? What does that mean for the different currencies and so on? So now almost every country, every environment becomes an almost infinitely rich thing to explore and find opportunity in. That's what I mean when I say fractal. Everything seems to have the same set of complexities when considered like from a conceptual level, but then when you look into the detail, there's almost an infinity of stuff to get into.
Well said. Thank you. Thank you so much, everybody. Are there any questions from the audience anyone would like to ask this evening?
I'm going to change my word back to chess boxing. This would have
That's the winning word for the whole night.
I'll just pass this microphone.
So is Donald Trump helping the world with all these tariffs?
Okay, so I'm the token American, and I'm just going to caveat this by saying I don't know if I actually think this, but let me give a bull argument. I would say the bull argument again is that just speaking about the U.S., I mentioned earlier Mitterrand used to call it the exorbitant privilege For U.S. citizens, that exorbitant privilege is an exorbitant burden. What it means is that if the rest of the world is constantly exporting to the United States, and the United States is the buyer of last resort for massive amounts of exported assets from Germany and China and so on, the result is that the U.S., and all of that is basically happening because of the purchase of debt. The result is the U.S. is having a much bigger debt market than it should. So this is dysfunctional because you have a situation in the United States where, let's say, 60% of the population can't afford a $300 unexpected expense. And at the same time, wages in countries like Germany and China and Japan that follow what's called the Gershon-Kwan model of development, which is that you suppress people's wages so that companies can afford to export lots. That model seems to be breaking down. You can see it in the Chinese geopolitics. It's a big reason why Trump got elected, because the broad middle class feels poorly done by in the United States, and it makes sense. There's a certain way in which they have been poorly done by. So there's a way in which the tariff, and again this goes back to Scott Besson's comment about being for Main Street and not for Wall Street. And the Trump administration has achieved this to a degree. I mean, one of the most astonishing things that almost nobody knows is since World War II, there have only been 3 presidencies in which the real wages for the lower class and the middle class have risen in the United States. Nixon, Trump 1, and Trump 2. So what they're saying seems to be working to a degree. And even if it's highly disruptive, even if it's creating a lot of volatility, there's probably an argument that it's rectifying a certain degree of dysfunction in the global balance of trade that had to be rectified. And that it's disrupting a lot of unnatural subsidization of various policies that previously existed. For example, the European countries got to have massive welfare systems, but then they never spent anything on their own defense. And that's not rational, and it's not necessarily a good thing from the balance of power in preventing wars either, if some places are vassals of others in such a directly subjugated relationship. This is my bull argument.
Sure. Yeah, I mean, I think it really depends where you are in the world and who you are. But I'd just answer by saying, does anyone know what the Kremlin's nickname for Donald Trump has been for several years before he was elected? They called him America's Gorbachev. And, in Russia, here in the US, in the West broadly, Gorbachev is sort of revered. It's not a compliment in the Kremlin, because this is the guy who, ushered in a period of economic chaos, and led to the demise of the Soviet Union. Voluntarily rescinded its big role in the world. Greatest geopolitical catastrophe of the 20th century, in the words of Vladimir Putin. So there's an argument in which Donald Trump, I think he's as historical a figure as Gorbachev or, Deng, for instance. He's fundamentally changing the geopolitical configuration of the world. Whether he's successful or not in the United States will have a massive impact everywhere else. How the US economy goes matters, for everywhere. But I think it fundamentally comes down to the question, do you think, Gorbachev is good for the world? Because if it can cut both ways, even if you are a historical, at least if it can figure. Good.
So, thank you so much, and really appreciate tonight's discussion. It's very obvious that geopolitical shifts are changing the way we are deploying capital and the way that we think of wealth management. I'd like to ask everyone... Of course.
More questions? More questions over... Yeah.
Oh, sorry.
In the light, Damien, of your previous comments, what do you think the effect of Mark Carney's recent call to Canada and middle powers like Australia to act as if the world are real and to get together?
Yeah, I think Davos man would have clapped. The Financial Times will have applauded. There'll be a lot of people here that say, yep, that's the right thing to do. And then interests and constraints will intervene immediately because everyone is playing chess boxing individually with Donald Trump. And, you know, as soon as he made those comments, poof, you're fired from the Board of Peace. You know, new tariffs announced. You know, I just don't see a world in which the middle powers of the world will unite against the United States. They don't have the interest to do it. They're almost universally, their most important economic and security partner is the United States. That equity in that relationship almost always outweighs any others. They're often competitors amongst one another. The European Union, despite, 30, 40 years of integration, still can't really align on many, many things. So I think it's a bit of a pipe dream. Nice words. Do I wish it were the case? Maybe. But I find it hard to believe.
Hopefully you're more optimistic sometimes.
Just pass this down to one more.
I was just wondering your views on whether once Trump finishes his second term, whether we might see a return to recent normality, or whether you think another populist will get elected, or maybe Trump will control power behind the scenes.
So I would just say I think that even if the Democrats win, it's never going to be quite normal like it used to be ever again. I mean, even if you just look at the way in which U.S. politics is fracturing, right? I mean, you have what's happening in Minnesota right now. Regardless of what else you think about it, they are basically saying exactly what the Democrat slaveholding states said right before the Civil War, which is that federal law doesn't apply and we're not going to apply it and it's nullified. The degree to which this is an extreme shift is almost difficult to process. But it basically means that, to a large degree, the post-1960s consensus in the United States has broken down to a very large degree. So whatever happens again is not going to be normal. The Democrats have an enormous problem where they can't choose between the very radical left wing and between the moderates. And there's also, they have a lot of implementation issues too, where the bureaucracy is frequently quite radically left-wing, even if the politician isn't. And so whatever is happening is almost certainly not going to be normality. I think the thing people probably should be watching a lot more is populism arising in Europe. I think that actually seems like a much stronger proposition to go long, whether you're a fan of it or not. Because the demographics there are much more supportive of the long-term development of political parties that today we would consider quite far right, and it's just driven by what proportion of your population is white. It's quite that simple, and that doesn't mean it has to be white supremacy, but it's just where do your interests lie in a country.
All right, we might take one last question.
Just with the AI and, the changes happening, there's going to be job losses. So job losses means fewer people have purchasing power eventually. So where does that leave companies down the line?
So what I would say is that in the long term, I mean, it's a basic economic identity that all that displaced productivity will eventually flow elsewhere. So I'm not confident that all the jobs will be lost forever, but there's going to be a huge amount of short-term displacement, and it's going to happen over the next 20 years. A lot of jobs that exist today will not exist that much longer. I'll just talk about those now. A lot of jobs that exist today will not necessarily last that much longer, and this is also an enormous complexity around immigration. Because the reality is that if a few people with a combination of software and robots can accomplish 10, 100, 1,000 times what they could 5 years ago, then the result is you probably need a lot less labor as well. And in this context, I mean, this is the direction China and Japan are currently going, and Korea as well, right? They're not looking to increase immigration, despite the fact their populations are declining. Takei Sanaichi, who just was elected Prime Minister of Japan, that is a strongly nationalist, anti-immigration regime. So they're not looking at any of that. They're like, we're really good at robotics. The robotics will take care of everybody. The robotics will take care of the old people. With David. David loves the Japanese robots that take care of old people. It's a great idea. It's exactly what you should be buying. And so I think this is a very large issue for how a lot of countries think about immigration more broadly, because where are the jobs?
Because according to Musk, people don't have to work in 20 years' time.
Well, they may not have to, right? But
how do you?
Yeah.
Dorothy, I think one thing we're missing here, of course, is that we'll all be working for the robots. So don't forget those jobs.
Excellent. Could we please thank our panel for this evening's conversation? And please feel free to come up to any of us this evening to ask more questions.
So what we'll be doing now, everyone will be around downstairs here for the next 20-odd minutes. All our panelists, members, or obviously your advisors and the rest of the Boston Global team, will be upstairs having drinks either at the Mulray Bar on the ground floor or the rooftop. So please come and talk to us. Everyone's here for the next 20 minutes. Please, we're here to talk. We want to meet you. We want to understand any questions you have. And I think we'll be speaking to you all in the next couple of minutes.
Thank you for coming.
Thank you, everyone.